Okay, good afternoon. I'm Mike Fouché from Grown In. Today is our webinar, What's Coming for Cannabis and Banking Services. So glad to have you here today. We have two of our panelists. We're expecting our third panelist, Todd Gunderson, to join us in just a few minutes. In the meantime, before we get started, I'd like to recognize our sponsors, including Locke Lord. Locke Lord was one of the first AmLaw 100 firms devoted to the cannabis industry. We're a team of skilled lawyers who work on capital raising, partnership and operating agreements, compliance, lobbying, litigation, and more. Follow our blog at cannabis.lockelord.com. And also Seed to Sale Funding. Seed to Sale Funding places loans and debt capital exclusively for cannabis projects through relationships with over 20 US-based debt providers, including private lenders, investment funds, and REITs. We've provided over $45 million in loans for a variety of cannabis grow and retail projects in the Midwest. I'd like to introduce our panelists here today. Our first is, before we get into the questions, obviously, the first is Michael Busch. And Michael is president and CEO of Burling Bank and Burling Ventures. Michael has more than 25 years of banking experience focused in the areas of regulatory compliance, risk management, operations, marketing, client service, and business development. As president of Burling Bank, he is responsible for managing relationships with governmental agencies, business partners, civic organizations, and financial technology partners. Thank you for being here today, Michael.
Thanks for having me, Mike. Appreciate it.
And our second panelist is Karla Haglund, president and CEO of Live Life FCU. Live Life Federal Credit Union is a financial institution serving all of the financial needs of its members in the state of Michigan. Karla has over 20 years of experience in process improvement and collections. She served in several leadership roles at Michigan-based Asset Acceptance Corporation and Weber and Olsace PLC, where she oversaw collection, recovery, and legal processes. Did I get that right, Karla?
Olsace.
Olsace, okay, excuse me.
Close enough.
I expect Todd to join us in a minute. Before we get, oh, there he is. Todd, hi, Mike, glad to have you. And our third panelist, Todd Gunderson, is CEO and president of Credit Union One. The credit union is $1.2 billion in asset size and offers product and services for all financial services related to personnel, business, and commercial banking needs. Previously, Todd was chief lending officer of Michigan Schools and Government Credit Union and senior vice president of operations for Wells Fargo, United States and Canada. Thank you for joining us here today, Todd.
My pleasure.
Just to kick things off, I'd like to ask anybody who wants to jump in, if you can start with talking about what are the legal differences between banking and cannabis versus other industries. Anybody jump in?
I'll jump in alphabetically. Cannabis, well, first, illegal on a federal level, though not on a state level, depending upon your state. But because of the cash intensiveness, is going to have issues with the anti-money laundering compliance, and so that's the main hurdle, at least at the outset, that a bank deals with, is proving that negative, that your client is not running afoul of any AML, KYC rules in the BSA world, and that's, when you layer on the federal illegality of it, navigating that path is definitely doable, but I wouldn't say it's easy. And I would imagine Todd and Carla would agree with that. And not, there are several industries that fall into that high risk category from a BSA AML world, but cannabis has that extra level of complexity given the federal illegality of it. And so that there are some different things that you need to do, but certainly for any high risk industry, you need to have a pretty tight compliance program. And with that, the talent, the personnel, the procedures, the policies that go along with that. And so we can talk about a little bit later, but importantly, to the bank, you hope that your client understands that, we're not out there to hassle our clients, unnecessarily. At the same time, we have a lot of, a decent amount of exposure, and a burden that we have to meet to our regulators that we don't want to jeopardize, our charter. So when we ask for something, we'd like to have it in a pretty timely manner. Certainly don't mind answering any questions if somebody had, as to the why or why you need that. But I think most banking partners are going to be very careful on how they approach it, and also very overt on kind of what they need from their cannabis companies. But it is an emerging area in addition, but it's, by size, it's become very big. So I imagine there'll be more banks and credit unions that jump in the pool. Hopefully there will be, because the industry needs more safe banking. But I think some people might be waiting for some legislation to do that.
Todd, can you talk a bit about how know your customer rules affects cannabis businesses maybe more than some other industries?
Yeah, I think that Michael's already touched on it a little bit. You're worried a little bit about where the money came from and where it's going. Are you the pass-through or the conduit? If we're doing business with a local Dairy Queen down the street, those aren't things that you're typically concerned about. I think that there's been a legacy established of a lot of cash that's been in the system. It worries regulators as far as the origin. It worries the tax people, in every single state as far as what revenue am I missing out on. It might be unpopular to say, but I think a lot of the know your customer really comes from the ability to collect the amount of tax and revenue that should be flowing through the system that may not be flowing through it otherwise. So you want to be able to identify them for that reason. I think all of the, I'll call them standard businesses, that's already been established and been in play for quite some time. I'm not sure anybody has a real feel for how to best monitor something that's been deemed legal by everybody, but yet treated still like it's illegal, because you've got the illegal aspect of it at a federal level, but yet the state looks at it as, they do look at it as, well, yes, it's the Dairy Queen, it's the auto shop, it's the whatever you want to look at it. They're complying and doing it. I heard one person describe it as that I'm in the compliance business and I happen to be selling marijuana, because that's what they do every single day, is deal with compliance instead of trying to figure out how to, work with their business infrastructure. So that's what makes it different. And I think that's where we try and come in as an organization and say, hey, what could we do to actually help your business grow? Which I think is a unique perspective from our stance as a bank, because most of them look at it, not that everybody means to, but you're so worried about getting in trouble by your regulators that you're so paranoid that you start to treat them paranoid, as opposed to looking at it like a business partnership. If it was any other business, we would be working with them on how to grow their business. And so that's something that we try and apply and just look at it from that standpoint. But those are the major differences that I would say.
So again, any one of you want to jump in? I want to ask you, and I'm going to ask each of you this question. Why don't we start with Carla, actually. Carla, realistically, what's your opinion on the likelihood of Congress passing some kind of banking legislation for cannabis anytime soon?
I had originally thought the end of the year, and then there's so much back and forth that I really can't give you an answer. I don't even want to speculate, because every time I have, I've been wrong. So I had thought by the end of this year, but I can't necessarily stand by that right now. I honestly don't know.
And Michael, I mean, there's all this constant talk about, oh, Congress is going to do something, certainly among advocates for cannabis, Congress is going to do something. It's going to happen any minute. I mean, when you talk to a client about planning for how they operate their business, I mean, what do you think about in terms of what a realistic timeline is of the current banking parameters changing?
Yeah, so I would agree with Carla. You keep thinking that it's going to happen, and then there are obviously many other political issues going on Capitol Hill, and then maybe a particular chairman of a committee isn't so hot on something, or it's not a priority for him or her. So I don't know that it'll happen in 2021. They will have to make a decision if they have the appetite to do it before the midterm elections in 2022. But what we talk to our clients about, and similar to Todd, you're trying to work with them to make them the best company that they can be. They happen to also sell cannabis. And so we would encourage them not to wait for some legislative magic moment. I don't happen to think that it's going to change a lot. It might give some bank boards a better comfort level that what they're doing has some emphatic protection written into law. But the reality is that there's already a compliant path to bank cannabis. And so from Burling's perspective, I don't know that a lot would change in our recommendations to our clients. Our current recommendations are to make sure as the market matures and gets away a little bit from the Wild West, there's a lot of technology and payment companies and other supportive technologies that can help them do their job that have matured. And the banks can be a good partner in either interacting with those technologies and companies and or supportive of them or recommendations. And so again, to Todd's point, I think we want to help them be the most compliant and profitable and relevant company that they can be. And I don't know that a lot of legislation for descheduling, rescheduling, certainly that would have an impact. But I don't see them holding back, waiting for that.
And Todd, do you see any different? You think things are going to change anytime soon?
I don't think they can get out of their own way. I think that what happened was when they didn't have control, and I mean the Democratic Party was pushing for the SAFE Act, when they didn't have it, they would have been extraordinarily happy to get the SAFE Act pushed through under the situation that was in place 12 months ago. Now that they have gotten control of the House and the Senate, they want to add every single thing under the sun. So instead of taking step one of, hey, let's make it so that we can get banking put in place. Because initially we were told, hey, let's make it safe, let's track the revenue, let's do these things. But now that they've got the ability to make it bigger and bigger and bigger, they keep adding, well, hey, let's make sure we have the expungement aspect of it. And I'm not saying that all of these things shouldn't be addressed, but there's a little bit of, why not just do one? Let's take step one, let's get it so that everybody can bank it if that's truly what they want to do. Step two, let's go ahead and get the expungement of records taken care of. Step three. And now it seems to be that we want to eat the elephant all in one bite. And I'm not sure where that came from, but I think that's going to be the biggest delay. And nobody wants to admit that. And maybe I'll get in trouble for saying it, but it's gone from a, hey, it's kind of like, we were happy if we got this, but now that we can get everything else, let's just keep adding and adding and adding. They could have passed 2 or 3 elements already if they wanted to, and then continue to work on it. And I think they're going to cause their own delay. I think, quite frankly, all anybody's looking for is for someone to absolve them and say, hey, the SAFE Act, I don't think it'll get passed at the federal level. I really don't. I think what'll happen, if I were going to be a prognosticator and a Nostradamus, is that they will say, you know what, we'll pass the SAFE Act. We're not doing anything federally. And once the SAFE Act happens, I think that's when Visa and MasterCard will be like, okay, that's good enough for us. We can go in there and start utilizing, debit cards and Visa cards because we're a financial institution per se, and we're not going to get in trouble or prosecuted for helping businesses operate legally. I mean, I don't honestly care if it's legal or not, as long as we can provide banking and provide that aspect of things. And I think that'll allow them to keep it so it's not legal federally, and then they'll still do the absolution of the marijuana related crimes and those types of things. That's my opinion. I think they're going to have pushback if they try and get it all, and I think they'll sacrifice making it legal at federal level. Everybody keeps wanting to argue to deschedule it, so that way they can do, unless you deschedule it, you can't do the research on it. That's the one thing that's the biggest push. And I think they're going to have a hard time getting it changed for whatever reason from off of Schedule 1.
So, Carla,
well, none of this could totally happen, but that's my opinion of how I think it's going to play out.
Sure.
But I don't
it's all prognostication, and I mean, I'm a former congressional staffer from a billion years ago, and one of the things I learned is that nothing's going to happen until it does in Congress.
Yeah.
So, right now, nothing's going to happen. So,
Mike, one of the things I wanted to add to that is the back and forth makes it very difficult to set expectations for your membership. A lot of the members believe once that act passes that they'll have little compliance, that their fees will go down drastically. That's not necessarily the case. And there is still a lot of room for people there. How do I want to say this? there is still a lot of changes that need to be made before we can simply say this compliance isn't going to happen. These fees aren't going to incur. So it is very difficult for us to set expectations for our members due to the back and forth of the situation.
And I want to ask you more about that in a second, but first off, anybody who is attending and watching, if you have any questions, we're going to answer questions from the audience. If you have any, please post them in the chat that's on the right-hand side of your screen. I'm watching it, and I'll ask those questions in a little bit. Carla, can you tell me a little bit about what are the kind of services that are probably not being offered right now to cannabis customers that aren't being offered otherwise?
Obviously, Visa and MasterCard is the biggest one, and that is what it is. We struggle with payroll companies, my membership. A lot of the payroll companies want to dabble in cannabis, but they don't want to take the full responsibility. They want to push the file and the burden to the credit union to process the payroll. And a lot of our cities have decided that they want some type of bond prior to licensing them. And the bond expectations that some of the cities have are absolutely unreasonable. 6 years, 10 years, and to find an insurance company that either A, meets what the city is looking for, so they want A+ grade, or finding an insurance company that's willing to do it those terms. Those are the big things that I've seen.
What about lending? Michael and Todd, are you lending? Do you know of other institutions that are doing lending?
We are.
Yeah,
You are.
and we have been for a few months. I think that's something that was the next level for banks to get comfortable. The issue with forfeiture law was kind of the biggest hurdle to get comfortable with that. And so, thus far, I think it's been proven that if you can show enough separation between, let's say, the OpCo and the real estate co, that you can get your documents drafted, your loan docs, that would be pretty, tight enough to get your board comfortable and the regulators comfortable that you didn't have any forfeiture issues. But we've begun to make loans on, dispensary build outs and things like that. At the beginning, especially for some of the MSOs, you're getting private money, which is pretty expensive, and or doing it yourself, which is very capital intensive. And so you're starting to see more people get some loans. There's certainly some REITs and other organizations that do the private lending as well, and are very much into that. You're starting to see kind of the next level banks begin to, and credit unions begin to do some of the lending. That's certainly the experience at Burling.
Todd, are you lending?
Yeah, we're lending. We've actually had the opportunity. We do the lending, and we've been fortunate. We also have a payroll service that we provide that is what I like to say. They're an actual payroll company that's decided to enter cannabis versus a cannabis company that's trying to figure out how to do payroll. And I think we've seen some of the challenges that are out there. So that's one of the things we try to do is bring a complete package and partner with some people who can add that, as well as, you get a lot of the management around the ATM systems and things like that. So what we try to do is say, hey, we've got the banking services, the payroll services, the lending services, as well as the ATM management that we can provide, because that's what we'd want to do to help it grow and have them not doing those types of things and spending their time, selling the product versus all of the other banking things that they're having to deal with, some of the larger ones taking on themselves in-house.
So, Michael, I want to make sure that I didn't catch something. It sounded to me like you're talking about lending against real estate versus
Correct.
lending against receipts or any other assets. And so you are lending against real estate versus cash flow. Is that right?
Correct. We are lending against real estate. So standard, kind of commercial mortgage loan, if you will. Sometimes they might have lower loan to values, but we're not there yet anyway, as far as lending on inventory or something like that. I mean, a lot of times your collateral, we're not going to be able to take and dispose of if it's inventory. So
Right.
I could see somebody underwriting, especially a company that's been around for a while, kind of the success of that company, if you will. But, at the end of the day, the regulators also want to know what your loan is often collateralized. And so you're going to have to, real estate is the easiest answer for that right now, at least in our opinion.
And Carla, is that the case for you?
Yeah, agreed. We do have some very, very small lines of credit just to clear checks, like an overdraft for some of the members, but very minimal.
And Todd, when you're
Yeah, that's the case, although we are getting ready to roll out and work with the state of Illinois regarding the social equity applicants that are going to be looking to get their licensing up and running. So at that point in time is when we'll go into the next level of things in addition to the real estate.
But that the social equity applicant lending, that's in conjunction with the state, right? That's a state program.
Correct.
So, I mean, that's interesting to me. Carla, you mentioned the point about line of credit, but none of you are offering like revolving lines of credit or things like that. Is that
We really haven't had that request yet, to be honest with you. The biggest, most important thing for them, I think, is funds availability. And so we're pretty quick on the turnaround, and candidly too, a lot of the clients that you're working with right now have been pretty successful. They've been in this for a number of years. And so the cash flow isn't necessarily the issue from a startup cost standpoint. And so it's a matter of getting that cash picked up and into the Fed and counted into their account. We're trying to encourage them to become less cash intensive. And I think that, I think it was Todd made some comments early on, that's a thing that regulators want to see for this business to become less cash intensive. These are billion-dollar companies now, and it doesn't make a lot of sense that they would have to operate in cash. And we feel very strongly about that safe banking is trying to get the cash out of that, so much so that we incubated a technology company called Spence, websites gospence.com. But it's the ACH-based payment technology mobile app. Think of Venmo for cannabis. But the how that sausage gets made and who processes it is really important. It doesn't matter to the consumer, but to the regulator, it matters how compliant that path is. And we certainly are more comfortable with the ACH path. There are other paths out there with cashless ATMs and things like that, but there's also issues with miscoding. And also, Visa, MasterCard say they don't want you to use their cards for cannabis payments. And so that's still, I think, becoming a more hot topic for cashless involvement. But we haven't had a lot of requests for revolving lines to kind of smooth out the timing of things coming out. But that, I would imagine that would be a request for smaller and newer firms.
So there's a lot of talk along the edges about fees and how fees are different for cannabis businesses when they're banking. Todd, can you give me some examples of how those fees might be different for cannabis businesses, and what sort of services have a different fee structure than you might see in, the Dairy Queen down the street?
I think Carla touched on it earlier as far as the expectations. I think everybody assumes that when the STATES Act happens, that all of a sudden all of our compliance back in goes away. It will still have to do all of that, and there's an infrastructure cost to that. So there's technology overlays that we have so that as the account activity is looking through. I can give you an example. Not yesterday. 2 weeks ago, we had a dispensary that went ahead and was going to send out a large sum, it was about $150,000 to one of their vendors. And our back end office said, this just doesn't seem right. Now, in a normal case, we wouldn't be verifying Dairy Queen sending, to go buy ice cream from somebody, what vendor they use. But because of this, we do, because it's, there's a lot of nefarious things that happen. Long story short, they had gotten hacked, and then an email was sent from their CEO of the dispensary. And as they were standing there, the CEO was like, I never sent that email, and we prevented a $150,000 wire from going out to a fictitious vendor that took place, and managed to hack into the system. That's not something that you're going to do for just the hardware store, because there isn't a fake vendor that's usually going to buy $150,000 worth of hammers. You're not dealing in such large quantities. So we've actually had 2 or 3 scenarios that, because we're monitoring the actual daily activity, where we've saved the dispensary money that they would have otherwise outlaid to people that they thought were legitimate vendors or contacts or business partners. That's the type of stuff that you have to do one, to be a good partner, but you're also subject to being exposed to that type of thing in this industry that you wouldn't be otherwise.
Because there's so much money that's being moved all the time.
There is. It's just you get that one hit. If they'd have gotten that one check, that's a nice score for them. So for us, we're watching that. But then also the government's requiring us to keep track of anything and everything because it's federally illegal. And so they put that burden on us. So we probably got 2 technology overlays that we go ahead and do, and we're required to file the SARS report. So you have a huge infrastructure overlay. It's like I always tell the people that we're working with, as soon as the government stops charging me, I'll stop charging you. It isn't because this isn't profit. It's essentially, this is what we're charging just to kind of cover our cost. And when this becomes a commodity, the fees are going to go away and you're going to have normal commercial fees because we won't have all of that overlay of compliance that's being, brought in by all of the different regulators.
And Carla, as a bank, you have to file a weekly report
So we're a credit union.
Or the credit union, excuse me.
A weekly report for what?
For you have to file you have to file some kind of regular report on.
I think he's talking about your SARS, Carla.
Okay.
Yes.
Yes. So we have to file SARS accordingly.
Can you explain what SARS stands for?
Suspicious activity report.
Okay.
But what FinCEN has done is given us very specific SAR criteria that determines whether or not there's suspicious activity, normal activity, or if they need to be alerted of something very extraordinary. So it is very typical that we file a SAR, we say we have checked out the business and they're in our compliance ranges.
And you have to do this on a weekly basis for every account?
It's a quarterly basis, and people can Google those processes. We can't deeply get into them as a financial institution, but you can Google them to find out more information. But that is where it's very, very taxing on our member to give us the information that we need to make the decisions to file those reports. So you have several people's hands in viewing an account, viewing reports. We have, to piggyback on what Todd said, when you have a wire come in and it says services, we can't just send that wire out. I need to know what the services are for, an invoice. There is so much work that goes behind it because my regulator will come in and say, what was this wire for? And I can't say services. That is not a sufficient answer for them. So that is where trying to educate my members on a very regular basis on why they pay what they pay is very key.
So
and to provide clarity, I know Carla said they're sent in quarterly, but that's the aggregate of all the reports that are done daily. So they're sent in quarterly, but every single day you're monitoring literally everything. Imagine everybody on the call taking your banking account and looking it up right now, and imagine somebody having to look through every transaction and document a SARS. That's what's taking place. Now multiply that time. So there's, say 150 people on the call. We're looking at 150 of you and take your personal checking account. We just had to look through every single account and essentially verify that it made sense. And that's something that we can give the regulator a legitimate answer for. And that's what's filed quarterly. So it isn't that you're just, kind of saying, oh, we did well this quarter. It's you're filing all of that daily aggregate information and it's done quarterly.
Thank you, Todd, for that piggyback.
Because that's why it's so expensive, is to give you just kind of it's not because we got to send in a quarterly report.
So to go into a similar kind of vein, Michael, I don't want you to reveal what your rates are right now or what you're charging people, but what sort of a premium should someone expect on, say, lending against real estate for cannabis versus another kind of business? Is there going to be a significant spread?
So our experience has been at the private market is typically in the low teens. There is some compression as more people provide these services. I think the banking market is probably still a little bit premium priced over maybe a 5% regular commercial loan that you'd make today, but it might be around a 7% or so. So historically, terms not that expensive and cheaper than the private market. Again, there might be some more compression as that gets normalized. Not every opportunity is the same. The risk isn't the same. The relationship isn't the same. but that's been our experience. And then on the deposit side, I would say for anybody who's interested in how that's structured, some banks will charge per account. Some banks may charge you a basis points on what you have on deposit. And other banks may charge you, for the relationship, that it doesn't matter whether you have one account or 5 accounts, it's kind of a flat minimum fee. The market's still sorting itself out in that regard as well. And again, I imagine that there will be further compression, but certainly something that that cannabis company should ask that bank, along with how long you've been in, banking cannabis, any compliance hurdles, programs, learning more about that, how they can be supportive. Are there any services that they don't offer them? But also obviously the pricing, how that's structured. And, we're certainly of the view you want to structure that for success. So as they grow and become more profitable, they're not penalized for that. And yet at the same time, to Todd and Karla's point, you're structured in such a way that you're able to cover your compliance costs. Banks get into this to attract low-cost sticky deposits and put in your traditional banking model and put loans against it. Banking compliance is not a profit center in and of itself on the compliance fees that we charge.
Yeah, and that's a good question. Karla, can you give me a sense of what sort of questions somebody should be asking when they're looking at a financial institution to bank with?
What services, what's the expectations for compliance? I think that's key. People don't understand their compliance expectations. And then when you begin to ask them for them, they don't understand why they needed them. What services they offer, what the expectation, like we have a rule, they can't fill their own ATM. That was really hard for people. I think some people, if they would have understood that better, might have went somewhere else. So it's really understanding my structure, what my compliance expectations are, and what services I offer.
So they can't fill their own ATM. So somebody couldn't have an ATM in their lobby.
Nope, they can have an ATM, but I expect it to be filled by a third party. That's an expectation that maybe Michael or Todd don't have. And so there's a lot of comparison. Why do you do this? Why doesn't this other financial institution do it? And we're doing what we feel our risk tolerance is. That risk doesn't fit into my program at this point in time. Mm-hmm. So this is a requirement that we have that someone else may not, and they need to understand those comparisons and how they work well for them.
Todd, I want to ask you, one of the questions we have here in the chat is, what's your view on cashless ATM transactions and the legality of the cashless ATM? Do you have any thoughts on that?
Sure, I think we're pretty aligned with what Michael tried to share, is that we're not interested at all, and here's how we define it. We're not interested at all in being anywhere near the Visa or MasterCard rails. Visa and MasterCard have made it very clear that they don't want you operating on that. There has been a lot of things in the industry where they've mislabeled, the code in order to get around it, or they've quite frankly lied about the address. And I'll tell you from a lending perspective why we want to stay away from that. It isn't because we're jerks and we're unsympathetic to what you're going through. It puts our charter at risk that Visa can come in and then say, guess what? We're going to remove your Visa ability for every other piece of the entity that you have. So it's a matter of putting that at risk, kind of the risk reward of, hey, we can go ahead and say that we're going to not worry about that. And then if we essentially get quote unquote caught by Visa, they could, do I think it's realistic that they would, but they could hold it over our head and say, hey, we're just going to go ahead and take away your Visa rights for every other aspect. Well, if that were to happen, you could see where anybody on this call, as a bank or a credit union, that would be a pretty damaging blow to any financial institution. So no one's going to put that at risk. At least we're certainly not. So we're willing to do the ATM aspect of things that are debit, PIN related. We're happy to do that, but we don't want to have anything touching at any level the Visa or MasterCard rails for anything. So that's the way I always tell people. Here's my litmus test that I always tell people is, what mountaintop are we going to shout things from that we figured everything out that we can share with everybody else in the world? And when they say, well, we're not ready to do that, that's usually my answer, that we're not going to go ahead and use the strategy that they want to invoke. Because if it's that great, we should really want to share it with everybody. And it's kind of funny how everybody clams up. And they're like, no, it's going to be okay. Okay, what? We've got 100,000 other members we got to worry about where we're managing their money as well, and we can't afford to put it at risk. So we get on the ATM debit PIN, and that's the only thing that we're willing to do at this point.
Okay. and I want to ask the three of you this question, starting with Michael. Your Burling Bank based in Chicago, do you have states that you'll only lend to, or not lend to the states, but lend into?
So certainly you wouldn't do anything in cannabis where that state doesn't have a legal program, would be the starter. When it comes to lending also, banks have certain, I guess, obligations to basically lend in their backyard. It's not to say that we couldn't make a loan in Ohio. In fact, we have, or in Massachusetts where there's a compliant state program. But banks also get measured on, especially a community bank, how many loans you make in your neighborhood, essentially in your backyard. It also starts to correlate to your CRA, Community Reinvestment Act ratings, and it's called your ins and outs, how many loans you made in your measurement area and outside of your measurement area, and discussion for another day, but that factors in. So if we have a multi-state operator who happens to be headquartered in Chicago and they have a facility in a state that we're comfortable in, that's not to say that we won't do the loan there. I think that if there was a cannabis company that had no relationship with us that wanted us to do a loan for them in, say, Montana, and the regulators are kind of want to know what the relationship was, the genesis of this, why are you doing that? And so from a relationship standpoint, which is paramount in knowing your customer, especially in cannabis and high risk areas, probably makes more sense to accommodate, people that you ideally have a deposit relationship with too, because you can see more of that business. It's not exclusive, that's not a non-starter, but that's how we've looked at it. Our loans thus far have been to deposit clients that we holistically bank. So we have a more holistic view into their activity.
It goes to know your customer.
Yeah.
Yeah. And Carla, how about you? I mean, do you have states that you'll only lend to, or do you have a particular focus?
My charter only allows for me to take Michigan residents. And the business has to be in Michigan. So I don't have the ability to go outside of the state of Michigan.
Okay. And Todd, you're also with a credit union. Do you have those kind of limitations?
We don't actually. We're fortunate. We're based here in Illinois, but we also have physical. The most relevant would be Nevada. We're also physically located in Indiana. Indiana hasn't, obviously approached the cannabis aspect. So we do a lot in Illinois and Nevada. We also do have the ability to operate within other states. Our charter that we have available to us, we can, I guess we can reach out to wherever we would choose to reach out and have a relationship. So if they're an MSO that has multiple locations, we're able to do that and branch into other states. So I would say, just like Michael, you always want to have your in and out that you're trying to help, and we're involved with the state of Illinois and the social equity applicants and everything that's there from the banking and lending aspect of things. We want to do everything we can. We also try and do that in Nevada. But there's a lot of, as everybody knows, I heard it said the other day that Chicago is the, it's in the cannabis industry, it's the Silicon Valley of the cannabis industry now in Chicago. Well, a lot of these people have, and businesses have, places that reach out into other states. And if you're going to be able to provide that service, I think it's advantageous to be able to have one touch point versus multiple touch points across the nation. So we try and help that business, streamline all their operations to make it a little bit more successful for them.
So I want to ask a question again of the three of you, and I'll start with Todd. Can you give me a sense of what some of the biggest mistakes cannabis companies make when it comes to banking, and if there's any particular things that they should be doing in order to improve their relationship and the services that they can attain? Todd?
So I'm sorry, I was reading one of the questions that got asked.
Oh, sure.
While you were talking.
I know the crowd is much more interesting. So can you give me a sense of what the sort of thing, what are the mistakes, what's a common mistake that banking businesses, or I'm sorry, cannabis businesses make, and what sort of things should they be doing so that they can attain more services?
Honestly, I don't think that the cannabis industry is the one making the mistakes. I think you got it right the first time. It's the banks that are making the mistakes. I've seen it. It's one of those things where You always have you can shear a sheep a million times, you can skin them once. And I think that banks were like, okay, they were going to hold these cannabis businesses hostage, thinking, well, they don't have any other alternatives, as opposed to treating them like a legitimate business, like they are, figuring out how to help them grow and realizing that if you do that, you're going to make more than enough money. So it seemed like a lot of the problem was caused by the banking industry not providing services in a manner that was going to provide value, and then you leave them without any options. So I've yet to see one cannabis-related business who has been unwilling to do anything that we've asked. We're like, hey, if we need this in order to open a business relationship with you, they're like, let me know what you need. Everything I have is an open book. Conversely, I've heard many banks who are like, oh, we're out of it because we couldn't charge $10,000 a month. It's like, Jesus, I know what our costs are, and $10,000 a month isn't what's needed to get by. But yet they're seemingly trying to create that hurdle. And then what happens is people like myself and Michael and Carla, who are on the call, who aren't charging this type of things, who actually want to have a business relationship and help grow it, you've been now tainted by all the others that have come before you. So if anybody has made it difficult, it's all of the bad, I want to say bad actors, but there's been some. There's been the bad actors of the financial institutions that make it more difficult for us who are trying to have a regular relationship. I can't think of one instance where a cannabis person didn't say, yeah, tell me what you need. I'll go ahead and do that for you. You know?
Michael, when people come to you and you get a first look at them, is there something they should be doing in order to make themselves seem more appealing as a customer?
I usually, kind of have an initial, get to know you conversation, a little bit of due diligence. If they don't know what BSA is, it's probably a little bit concerning because, they're getting into a very high risk compliance area. And so, it's.
And what's BSA?
Sorry, Bank Secrecy Act. So if they don't know what their compliance, thank you, what their compliance obligations are, depending upon what stage they are in their own maturity of their company, that could be concerning. And so we want to educate them and be helpful as we are in the service business. And so totally agree with everything that Todd said. At the same time, they need to embrace that obligation and make sure that they put forth dedicate the talent on their team to satisfy the needs that the bank has to do its job. As I mentioned before, we're not out to make it more burdensome for any particular client, cannabis or otherwise, but we know through now doing this for 4 years and three examinations by regulators what it takes. And so over time, you kind of hone your program and you dial into what's that sweet spot, a little bit of Goldilocks, if you will, in compliance. If this is too much or too little, this is just right. And so that's, I think, where you can be of best service to a cannabis client, whether it's a large MSO or a new social equity applicant, that you can inform them on and be very clear about what you will require. And so kind of truth in advertising on your program on what you will require. And then in reciprocation, you'll want to make sure that they appreciate the burden that we have, the obligation that we have, that we're not going to put our charter at risk just to be a friendly, banker. And the speed of resolution is important to us because we're also busy. And we're trying to cross these, items off our list and make sure that we get our filings done on time and we can stay on top of all the incoming business. That's not been an issue thus far, but as the social equity applicants, particularly in Illinois, come online, I'm hopeful that other banks will jump in the pool and provide services because the 5 banks, credit unions that overtly stating that they're serving the industry, quite candidly, isn't enough to get it done.
And Carla, you serve a territory in Michigan that has a lot of cannabis businesses, more than a lot of other states. And many of those cannabis businesses are small, or relatively small, with individual owner operators. That is, does that bring in a certain number of people that need to be educated and things that they should know before they really start banking?
Oh, absolutely. Even though we've been doing it 3 years, Michigan is still very much in the infancy stages. And there's a lot of comparison of what we require versus what Chase requires. And I have to constantly say to them, but Chase doesn't offer this type of banking. So them being well educated and understanding timelines and understanding what it takes for me to do my job to support them fully is absolutely key to a successful relationship. If you don't have that, there's a lot of pushback. We found that very early on when the credit union wasn't educating people enough. Now at the very beginning of the meeting, we set our expectations very clear. Here's why I'm doing what I'm doing. Here's what I need from you. And if these things don't work for you, find an institution that does. And that has made all the difference in the world. The education, and we continue to educate people. We onboard new things. We're onboarding technology and really getting them clear on why we need it and what we need it for is absolutely key.
All right. I want to thank the three of you today. Michael Busch, President and CEO of Burling Bank and Burling Ventures, Karla Haglund, of President and CEO of Live Life Federal Credit Union, and Todd Gunderson, CEO and President of Credit Union One. I want to thank the three of you very, very much for participating today. This was a great discussion, and a ton of people were here to watch. So thanks for being part of it.
Thank you for having us.
My pleasure. Thanks.
Thank you.